Mike, just testing the mic. Can you hear me okay? And good morning, everyone. This is Chris Brecher. Can you hear me okay? So today is just more of the same of what are we talking about? We're talking about that if markets open down, you got to buy them. We're long the IWM and the XBI. But the point in there is this, that you go for the laggards because the bond market's rallying. So the IWM has gotten toasted because a lot of stocks within the IWM, the Russell 2000, are interest rate sensitive. So that's what we see right now. And I can't tell you how many people don't want to look at this, don't want to look at that bull flag. And I'm telling you right now, as long as the bond market stays up, the Russell's going to stay up until, we're long it. So we're long that and the XBI. And I thought I'd show you on how I'm scanning for stocks within the XBI. So just to let you know, there was a good takeover this week. And this one right here, that one. So then the first thing you want to know, was there a way to see that? Was there a way to see that it was going to get taken over? Now, we were long because we're long a basket of a bunch of biotech stocks. So, broken clock syndrome on my part. But the key in here was there unusual option activity? So I thought I'd show you in here. What we're talking about. So number one, was there some kind of consolidation? I know I showed this in the options room, I think yesterday, but I thought I'd show you two ways to look at it. Number one is to go through a 6-grid chart. And I'm doing 6-grid with 4 squeezes. So just keep in mind, a squeeze does not mean to blindly buy something. You need to combine it with other things, but sure, it had a squeeze. That doesn't mean I'm buying it, but it means it came up on my scan as a bullish consolidation. Bullish because it was over a lot of averages. So it was over the ATR trailing stop and the 50 moving average. So it was over both. So that's number one. Number two, did it have unusual option activity? So, and by the way, a lot of times I'll do 4-hour and I'll do daily, because sometimes it just shows up like that. So the next thing is, I did it wrong, got too excited. So was there unusual option activity? Well, there sure was. This is 2 days ago. I'm going back to think back, and I'm going to the 29th. So what you want is this. Out of nowhere, 5,000 of the 21s. You think somebody didn't know? Now, the beauty of this is this hasn't worked for a year. Just hasn't worked for a year of unusual option activity. Usually, if one of them gets tipped off, other ones get tipped off. It could be lawyers, it could be investment bankers, could be somebody over here in the elevator. Very little enforcement of this. So the first thing I do in here is I try to go backwards. So I'm going back like this. And I'm going and just taking, right now, it seems like it's the healthcare stocks. So what I'm doing in here is this. I'm just going to healthcare stocks and I'm scanning for unusual option activity, and I'm scanning with stocks in the squeeze. So I'll go and put this in the essentials room. I can't copy and paste in the YouTube room. So I'll just show you what we're talking about. So I'm going into healthcare, and I'm going to a daily squeeze. A daily squeeze you could just find. So let me go to the one I did, if I can find it. Well, so all I did was this. So I went and took every healthcare stock, every one. All I did was go on Thinkorswim. Everybody can put in healthcare. Now I'm just taking all healthcare. So then I want them over their moving average by a little. By a little. So this is just over there simple healthcare. You can do that on FinViz. You can do it on Thinkorswim. It's going to be a ton of stocks, 400, as you see in here. Now, there's a couple of ways to do it. One of them is you could look for consolidation patterns. So that's why you could intersect that with the TTM squeeze. So you just go, and this is all on Thinkorswim. So you go to License Studies, TTM squeeze. I did the wrong one. And this is all just right there for you. All in there, over the 50 and a squeeze. So now you have consolidation. It's only 14 stocks. So that's one way to do it. So the other way to do it is the way I like doing it, is this way. I take stocks that have at least some open interest. So I'll show you what we're talking about. Now, this doesn't mean they're going to get taken over, but if I want to go and have some call spreads for January or April, it's a good way to start. So here's all the stocks in the healthcare above their 50. You want things already in an uptrend. The other thing I do is I take options. So one of our loyal subscribers on the Chart Patterns Mastery hates when I show things that don't have any options. So I'm just taking open interest, at least 4,000. So it's 112. That's not that many. Not that many. Now, usually what I'll do is I'll take them over $5. Now, that's personal preference, but I'd rather not trade penny stocks. So there you go, 73 stocks. Now, the reason I'm showing this is that I don't look at I can look at every one. Definitely could look at every one. You can also sort by market capitalization. If it's over like 70 billion, 50 billion, you're probably not going to get taken over. But all I do then is I look at call sizzle and put call ratio. And what I'm doing in there is if I see the put call ratio under like 1, so there are a lot more calls than puts, I'm also looking at that call sizzle, and I look at this all day. And that's how many percentage like over its normal option volume. Now it might do only 10 options and it does 600. That's like 660%. That's just the way out of 10. And then I go through them all to see if any of them are funky. So you see that put call ratio 5. So there are more puts than calls. I throw that one out. This one, NTRA. Yeah, well, I had that on my list already. Now, let me tell you another thing about just sort of the ins and outs of how I do it. Number one is if it's up, you're going to have more call activity because it's already up. IMGN was just unchanged and had tons of call activity. You want the ones that don't have a lot of movement, just sort of sitting there trying to form some kind of bull flag and unusual option activity. So that's what you're looking for. The other thing is usually you want the option activity within 60 days. Because if you're going 200 days, heck, you're paying too much premium. You actually might lose money being right. These insiders or whoever, they're going to buy the most bang for the buck. So remember, IMGN, they were buying out of the money calls. So just that's how I do it in here. So that's one way. So the first thing I do is I go through all of this. The healthcare ones, like I showed you. So here's all the healthcare, at least healthcare all. It's a lot. So chart, essentials room, I can share that. Sort of gives you an incentive to join simpler, no doubt about it. There. Now you can always massage this. So what do I mean by that? I call it just, you could take all the healthcare. So I go into healthcare all, and you can move this all around. So you can have it 55 to 50. You can have it over the ATR trailing stop instead of the simple. You can have the open interest 2,000 instead of 4,000. But then I'll go through all of these. So that's what I do in the background. So INSM, it already got taken over. Wait. IMND did. INSM was also on my long list. So why? Because I had a squeeze on a daily and it started trading options. Look at that. That's a nice bull flag, and I missed it this morning. So what else is a key? If it's a stock that trades a lot of options, lots of times it closes on its high, and then it gets nailed on the opening because everybody's pissed off it didn't get taken over. This especially works on Monday mornings. But as you see in here, yeah, it went down yesterday, but it opened all the way down here. In fact, actually yesterday it rallied right on the close, but it opened all the way down here and then went nuts. I can't tell you how many open down and then go up. So it's just incredible of these takeover candidates, how they open down and then go up. Look at that. Here's another one, Schrodinger. We're in that. So if you're on the Chart Patterns Mastery, how many of you were long this? So where did it open? Down here. There we go again. We bought more down here. We came in long. So what else are we watching? Well, I'll show you the healthcare, and I'll show you the more expensive, because it's just something you should have in the back in your hip pocket. Not the Lillies of the world. Let's take like Seattle Genetics. There you go. 212 to 213. And some of them are really dramatic. Let me take some of them. There. 78 to 81. That's another one I was watching. Now, how do you play these? The best way to play them, if you're going to try to buy after the opening, is to look for a reversal candle. That's what we actually bought NVIDIA today because of that. So all we're doing in here is if it opens down, we're looking for that. So that's a piercing pattern. So all you're doing is you're trying to find what takes back half of that with the stop down here. So that's why we bought NVIDIA. Now, if you're trading a lot of biotechs, just put up the more expensive. It's hard to watch them all. I know that. Hard to watch them all. But that's what we're watching in here. Now, you might say, yeah, but what happens if the overall market crashes? Well, hell, all over internet. Everybody I listened to said we were going to crash in November, except I said that once I did a short selling class, we were going to go straight up, which is what we did. sort of like Murphy's Law. There'll be a time and a place to play on the downside. It's not now. It's not now when the Russell has a bull flag. While the Russell has a bull flag, you buy dips. I mean, that's the way I look at it. So let me look at Wolf. Hey, Mike, I hope you're doing well. And thanks for always sharing these ideas. Wolf Speed. I don't even know what they do, but thanks for, showing that. So let's look. That's a good one. Does it trade a lot of options? You're saying yes. Yeah. Look at these. Look at that. Now, the other thing is persistent call buying. So if you see that, you're not talking about that. You were talking about January, the normal expiration. Look at that. So persistent. So you already saw that in here. And I would go back on Think Back and put in like the last week and see if they're accumulating them. So let's go and look. Just keep in mind the Jan 40s. So we're going to go back to Think Back. So I don't know if you need this, Mike, because you seem like you have this down. But let's just go to these. Jan 40s. And we're going to go back. Well, you see what's going on. Persistent buying for a month. Now, obviously, the stock's gone up, but that's a great one. I'm going to put that, well, I can't put it in my healthcare, so I'll put it in my December long list. Believe it or not, I have a December long from last year. So I'll put the Wolf in there. And in there. So thanks for howling about that one. So there you go. Oversold in an uptrend and good call buying. Even if it doesn't get taken over, that's a good one. So, Mike, you saw that yesterday look good, right? So what happens? Bless its heart. It gets killed on the opening. Oh, that's a great idea on your part. So it still has a good structure. You see that? That doesn't mean to blindly buy it. But yeah, that was a good one. So very good one. So thanks for showing that. So that's a good one. So there's a number of them. Like I said, we're still in Schrodinger, and I'll show you a couple more. Let's see X-ray. There. Well, yeah. So as you see, when they get overbought, even in an uptrend, they usually stutter. And it filled the gap. So I missed that one. Exact Science. There's one for you, Mike. Right there. Yep. Bless its heart, it also had a sell-off this morning. So now let's see if it trades any options. So that's a good one. I'm not in it. I wish it traded more options. Really wish it traded more options. But yeah, I see exactly what that's the kind of idea, even though it's not a chip, that's a healthcare, but that's the kind of idea. So if I do that, I'm probably going to go into January and do a 65.70. You cannot do a butterfly because they might get taken over. You might be right and lose money. Look what the low was. That's tough. So you're rooting for this not to fall apart tonight. Transports are up 300. The whole market, and you want to try to buy a dip on the opening. So that's a good one. So that kind of idea. And I just can't tell you how many have that kind of squeeze action and then open down at support. Yeah, I didn't buy it. I'm just telling you that goes on. So if you compare it down, which I did here, ironically, one of them is Para, which is Paramount, which some of our loyal subscribers keep buying every dip. But there you go with one like that. So just, keep that in mind. Yeah, if you want to mess with Wolf, the only problem you have, the broad market's getting a little extended, but that's something where you probably go in like, where can it go? So I don't really look at the 100, but you can, sure. That's where to buy it when it's oversold in an uptrend. So I would rather buy it on dips. But if I buy it, I'll probably do something like, I hate buying premium. I don't like buying this, where it's 40.45. Because it's got to go up 3 points just to break even. I'd rather do a 35.40, but you and I know it's probably $3 already. Yeah, 260. Now, a rule of thumb, even if it's in the money, I don't like paying more than 30 to 40% of the width, even if I'm going out that far. So this you're paying a lot. So you're paying 50%. So that's just too much for me. So I'm not going to touch that, but that's the kind of idea. But it's also the kind of idea where you can throw in a low ball bid, especially if they have weeklies. So definitely that. Now, I got another thing. So you mentioned about the 100. And keep in mind, I don't poo-poo any kind of moving average if it works. So let's go in and add them all. There's the 20, the 200. Here's the 20 and the EMA. Is that okay to make that 100? Even though it's an EMA. And let's just see. I mean, like I said, I look for anything that can give me an edge. So, Sean, let's look at this. In fact, I'll make this nice and big. There. And I'm going to make that. We're just experimenting. I'm not trying to rub anything in. Like I said, any kind of help with this is appreciated. So let's go look at Wolf. And the reason I do is there are certain stocks that like to go to their 100. So not every stock. So I'd rather like it when it's oversold down here or here or here, especially these two, oversold at support. So, but I totally see what you're saying because it worked before. It worked. So the more times it works, the more interested I am. So, Sean, do you want to see this chart? Do you want me to share it? There. Like I said, if it works in here now, does it work in Broadcom? Takes a while to build. Sorta. Like I said, there's certain stocks that works a lot better than others. Yeah, that worked. Look at that. That worked fine. So maybe I'll start using that. So I like that. So thanks for sharing that. So, and then now you're like, well, do you buy stocks that are oversold at the 100? So I'm always looking for an edge. That's an interesting theory. So I'll work on that later and report back to you. So definitely look at that. So yeah, that's a cool idea. Now, if you go into FinViz, they don't give you that kind of benefit. So I'll show you. You know, I like to scan with free sites. The problem with this technical, it only has the 200, the 50, and the 20. So we could definitely, I mean, Wolf isn't going to come up on what I'm going to show you because it's just too darn many. So I just showed healthcare. And all I did in here was take them over the 50. Now, I do have an idea for you. So I have a cool idea for you. Is a lot of funds, you know, everybody talks about algorithms and you can't beat them. Most algorithms are incredibly simple. Like if something gets over the 50. So here's another way to do it. And it's been working. This has been working. So we're going to take the average volume at least 300,000. Personal preference, optionable and shortable. And then technical, I'm going to take the ones that have crossed the 50. Now, it's hard when it says cross 50 from below or above, but I think it's that. It's only 11 that have crossed it underneath, but I'm going to double check that have an average volume of 300,000. They're over 5. So here, let's look. So you got all of these, 11. I think we can look at 11. Well, that's a tough one, but I would put that in your hip pocket because it's just getting to the 50. So in fact, let me do this just so you can see how excited I am. I'm on the edge of my seat. That's why my head's so big. Not because I've done a lot of great trades. My head's not big from that. It's just because I lean over. So you're going to see that a lot of times when they get over the 50, you get a nice pop. So these are just doing it now. Just doing it now. So there's one. Doesn't move a lot. But I bet if you go into something like, let's take your Wolf. Not perfect. So what happens? A lot of times, art, not a science. It gets over the 50 and then it gets overbought. But a lot of times I see when it first gets over the 50, it has a nice pop. So just thought I'd show you. That's an interesting way to do it. If you don't want to do it that way, there's another way that I do it. Let's say we do healthcare. We take average volume 300,000. We take optionable and shortable and price over 5. That's personal preference. So it's 300 stocks. But then what I do, and a couple of things have worked. I'll give you one. One is they're just over the 50. It's not that many. But there's another way to play it, that they're down for the year. Yeah, the old tax loss selling is going away. So a lot of stocks that are down the most, once they reclaim the 50, they start having good moves. It's not many, 44, because the market's had a heck of a rally in November. So all I'm doing, I mentioned this on Trader TV on Wednesday. All I'm doing is taking stocks over the 50, the performance, let's say down 20%. So what happens is people sell their losers, they sell their winners. So they can offset it. And then 30 days later, they can buy the losers again. Seen this a lot of times. There, 55. Now, a lot of biotechs, if they have bad trials, They're going to gap down. I don't go for those. I can't go for that. There's one for you. MGTX. I have no idea what they do. This one doesn't look bad. I've been in that one before and lost money, so that's sort of a bad taste in my mouth. But all you're doing is looking for the ones over the 50 that are down for the year. So there's a good one. NRIX. I have no idea what they do. ANGO, we already have on our list as a possible buy. So that kind of idea. And Mike, that's right up your alley. Mike, I'll send you something on what I used to see that you're not going to believe with point and figure. Well, I watch people get paid to go around the pit and put on, that graph paper with the X's, with the squares, and they'd put the open, high, and low for each day. They'd actually manually do it, amazingly. And I really like doing them like this. My goodness, it's 55 stocks. If you don't have the time to do that, that's not that hard. How about ALHC? Sure, we could put that in there. RNA. All I'm doing in these is they're those tax loss candidates. And then I'll look for unusual option activity, or I'll look to be sure they trade enough options. Real unscientific, but in this type of environment, those kind of things work. Relay, I already have that one in there. Now, I was going to hand this one off to Lorna, but I'm just doing it myself. So we're into puns, especially if we're making money. I'm a lot funnier, just to let you know. There one, DH. VIR. Here you go. Like I said, I don't like gap down, so I'm not taking that. Zixi. Yeah, that looks like a bull flag. I'll put that one in there. ZYXI. Dawn, I already have in there. So let's go put the Dawn. Let's put the Zixi. And that's how I build a watch list. Like I said, a lot of these have gotten away from us today, like Rockwell. Yeah, I liked Rockwell, even though that's not a biotech. Just like your wolf, a good chart is a good chart. Oversold in an uptrend. So it worked. So I have all these in here. Yeah, Mike, I also have, let me show you. Let me see if I can find it. I collect antique books on the stock market. And do you remember the SRC charts? No, I don't have them right now in front of me. But do you remember the, yeah, so I have them from the 1987 crash. Pretty cool. The month before, the month during, and the month after. So now let's just take these and let's see if any of them have unusual option activity. Like I said, very, very unscientific. We'll just go to option statistics and make it easy. Now, keep in mind, these are up. They should have a lot of options. CMI, yeah, I had a economically sensitive. I have one also. So, and just to let you know, I was interviewed in USA Today for that. But I think afterwards, when it got really slow, I don't know where it is. So EMPH, has this traded a lot? Yeah. How about exact science? No. Halo? No. That's all I'm doing. Wolf, yes, like you pointed out. X-ray, no. Now, let me just tell you, just because it doesn't have a lot of options, if they have a tight market, yeah, I might play it. Not bad. 25 cents, not bad. So I'll definitely look at the bid and ask. Like I said, we're already in Schrodinger. Not bad. But for me to do them just for like an overnight, like rumored takeover play, you have to see gigantic option volume for me to mess with it. Well, that's paramount. Already missed that today. Relay. Well, you see, not many. And that's where I am, building the watch list, building the watch list. I think that's really cool. So that's one way to do it. Now, 5 minute, I'm just using if I'm already in it, I might use the 5 minute to get out. But I'm just telling you right now, or I'll get out a half. So if you see that kind of thing and you're long it down here, yeah, that's a tough one. So on a long term, if you're up money and you see it start to turn down, but the 15 or the hourly is just turning up, yeah, I'd be more likely to sell only half. When I see it that overbought, I have to have a tight stop. So you can use, I use the ATR trailing stop more than the moving averages. And I don't use if it turns over the MACD and all that. I look more at the price action in here because if you don't, you're going to just get chopped up on these little turns. So if it turns and it crosses something, yeah, that's the way I'd look at it. Let's look at the SPX. That's what I'm telling you. You just can't trust a turn like that. I remember overbought in an uptrend. Now, you don't want to chase it up here, but you got to combine some other stuff. So that's one of them. Yeah. So in an uptrend like this, the first thing you want to see is like one time frame longer. You see the bull flag. So if you're long on the break, let's say you're long on the bull flag. Well, there are a couple of things. And Jammer, I hope this helps. So let's say you're long right here. And you're nervous because you're up a lot. And everybody on TV is bearish. So that's the SPX, not the ES. So a lot of times if I bought because of a bull flag, first I'm going to look at the measured move, that amount. Second thing is if it's made the measured move, I'll go to a 5 minute. So as you see, it's over everything, even the short term. Now, when it goes up this fast, it's going to be pretty far away from the ATR trailing stop. So I use a shorter term moving average. So if I bought it right here and it's doing this, when it's this far from the ATR trailing stop, I might sell half or I'll go to an ultra short term. And believe it or not, it's still over everything. So the short term should be a 20. I did the 9. You can also do a 20. The problem with the 20 is it gets too close to the ATR trailing stop. I'd rather use a 9. And as you see, there's not a reason to get out yet. Now, you might say, yeah, but if it hits here, that's 8 points. Well, that's why you could sell half. If you sold half and then it goes to here, you feel like a genius you sold half. If it goes to 4,600, you're a genius for selling in half. So just keep that in mind. 9 and 20 is a good idea, but for stop reasons, I mean. There's your 20. So the 9 and the 20. But for stop reasons, yeah, I'd use this and the ATR trailing stop. It's a good question. So a great question in there. But yeah, definitely. So what do you do now with the market? Well, number one, we're long the Russell. Number two, like I said, the higher the bond market goes, the higher the Russell's going to go. You don't have to play the caterpillars if you don't want to, but the higher the bonds go, the higher the Russell goes, which makes it more likely that the stocks I showed you are going to go up. Not because it's already up, but because bullish patterns are more likely to work in that situation. That's all I mean. And that's all I'm doing right now. So the one problem with the ES. So if you're long the ES, so I use ATR trailing stop. I mess around with them both ways. Sometimes simple, sometimes exponential. They're relatively the same. So right now I'm using the exponential, but I change it all the time. On my 12 grid, I have simple. They're extremely close. So I just either. When the market's volatile, it's probably better to use the exponential. All right, let's try it right here. All right, down here. Right there, where it crossed. Let's see if you put the exponential, what would have happened? So it's a really good question. That's the simple. Survey says, look at that. Yeah, wouldn't have stopped you out. So either. I mean, usually if it's at support, I'm not going to get myself out. So either. So I experiment all the time. If I see it where exponential works better, let's try Apple. Well, it's been an uptrend all day. So I'm just telling you, if you want to play this to the downside, you got to wait for a cross on something. So let's take the simple. I'm telling you, as I'm doing this live, if I see that the simple isn't working as well, I'll change all of them to exponential. Nah, that worked the same. That's how it usually is. Nah, relatively the same. Relatively the same. It's a good question. So that's where I am right now. Now, what do you do the rest of the day? Well, you got the transports going bonkers. Another one, which sure looks good to me. We were along here on the bull flag, but I got out too early in that resistance. So as you see, it's not oversold. It was overbought. It was oversold in an uptrend. So, but everybody on TV bearish. All right, what do you do with the NQ? That's a lot of lines. Let me take that off. Well, it's overbought on a weekly, but here we go again. No reversal. So it's overbought. I don't know if you trust that ATR trailing stop. So here we go, TG. You see it's under it. Let's go to the other one. There, it's over it. So now, ideally, you just use both and hope it confirms it. So, in fact, let's do that. Now, just keep in mind in the background, I'm doing stuff like this of looking at this stuff. It just called it it doesn't hurt to do this. Don't ask me why one of them's red, that opposite. So there's your exponential. There's your simple. I did it as dots. Give me a second. But I like your idea about this. Remember, it's just called new study because I duplicated it. But I'm definitely doing this in the background, trying to figure out, is there an edge? There. So, in fact, let me share that for you, TG, just so you have a perspective. Now, one of them doesn't say ATR trailing stop, but it's basically the same. I mean, it doesn't say it, but you sort of got the drift. There. So, I mean, you see it in there, it's similar. So now you go backwards. Is it similar on a 5-minute? Yeah, look at that. They're almost on top of each other. How about on a 15-minute? Because I'll take whatever's volatile, see if it works. Yeah, it was a little different. Okay, how about a nutso stock? Let's take Broadcom. A little. I wouldn't call that a lot. Not enough to make, for it to screw you up. How about on a 2-minute? No. But it's a great question on your part. Like you see, it just doesn't seem to make much of a difference. Now, I'm sure that if you get stopped out on something, you're using one that I showed and the other one isn't, you'll get pissed off. But overall, that's what I wanted to show you. How about the NASDAQ that's moving a lot? Man, I don't know about you, but that seems pretty close to me. It doesn't hurt to have both, just in case there's something a little different, like this one. So, in fact, that's why I like using a 50 moving average on a longer term chart because I like it over both. Yeah, I get much more excited on an individual stock if it's over the moving average and the ATR trailing stop. Like here, it didn't work. So, but I'm just telling you, that's how I like to do it. Let's take your wolf. Wolf. All right. Over the ATR trailing stop was a heck of a better signal than the 50. Look at that. So I like the ATR trailing stop better. I think that's a perfect example. So let me do that one too, just so you have these in your hip pocket. There. And like you mentioned earlier, sure, we could add 100 moving average. So to me, it's all about end game, getting the direction right. So that I like using the ATR trailing stop, and I think you see why. So let's take something else. Let's take Paramount, one of our loyal subscribers' favorite. So what are you seeing there? Now, this ATR trailing stop's a mess. A lot of times when it gaps up, it's a mess. But moral of the story, it did get over something. So how about on hourly? Yeah, they were close. But I'll tell you right now, to me, chart patterns are more important than any of this. So if I see some kind of bull flag, still I'd like to see it over something if I see a bull flag. So I hope that helps. Now, we were in this earlier in the week and got out here. So, I mean, why'd we get out? It was getting too far from the ATR trailing stops. But in the grand scheme of things, it's still a bullish pattern. So let's go look at that on a 4 hour. Well, it's still a bullish pattern. See, it broke out of there. So how about on the daily? Yeah, it still looks good. Only problem is the overhead supply. That's why we got out at 5 in the first place. I got to put that down here. So this is the kind of stuff that if I see something, I'm going to be alerting it in the chart patterns mastery room. But let's just see the option volume. Yeah, nothing. And that's where I am. That's where I am right now. You see what's going on with the NASDAQ. Now, you might ask, why isn't the NASDAQ following the Russell? Well, a lot of this is that typical rotation at the end of the year, selling the winners and buying the losers. So now the key is, do you short the NASDAQ? Well, heck, boy, that sounds like if anybody watches Fargo, well, heck, maybe, but I have to see more of a bear flag action for me to get bearish. Now, if I did this upside down, heck yeah, this is upside down, then I'd get bearish, but I just don't see it at the moment. When it gets like this and I don't have a setup, I just back away. Like you said, what you mentioned in there, what happens if it refuses to go up? The MACD is turning down. Well, it really needs to get under something. So I just don't touch it when it's relatively underperforming and it's overbought, but it refuses to have any kind of bearish pattern. So I just back away. And then you get the other thing that'll totally screw you up. So what's the totally screw you up? Totally screw you up is if a stock is forming a bull flag now, when the Russell's up 42, doesn't that inherently mean it's acting bad? And that's where it'll out-psych you. So on the one hand, you want to take the bull flags. On the other hand, if the Russell sells off, is that stock going to sell off as well? Really tough call when everything's extended. So long term, because I'm supposed to show market outlook, I don't know what to tell you. I know that we're overbought finally on a weekly chart. We're at resistance, but you don't see any rollover. You don't see a reversal candle. The first reversal candle, a lot will say I already missed it. Look for those reversals. The problem is these were overbought under the ATR trailing stops. You see what happens when it gets overbought over them. Yeah, they kept going. So the thing is, you probably want to see some nasty reversal candle, but it's going to be extremely hard if bonds are up every day. So, I mean, that's what I'm seeing. So I have to go and log off. Thanks for being with me, and thanks for the great questions in the essentials room. And I hope I've helped with this, showing you a couple of scans of what I'm watching. And like I said, you see this could be a doji on a weekly right here. See the old doji? We're an indecision candle, but you don't have any reversal pattern yet. So that's what you're looking for. And then after the first reversal, you want to find a bearish, like hourly chart. So take care. Thanks for being with me, and I'll talk to you. Have a great weekend.